So we're going to break down this Meta day trade that we took for 220%. We ended up buying calls for 92 cents and selling that for $3 in the same day. So we're going to break this down, and we're going to start off with this 5-minute chart. We see 9:30 here and we see 4 o'clock over here. So pretty much I held this day trade all day. All right, the true definition of a day trade that we're looking at. So I'm going to break down why I decided to take this play. And in order to do that, we're going to back up a little bit to, let's go to the daily chart, and we're going to get an idea of what the big picture looks like. And each candle represents one day. So we see a nice yellow line, which is my 50 EMA. This tells us that if the price is above this line, we are still in bullish territory. So it also acts as a key level where price could reverse. As you can see, we had a reversal here back in early November, and we consolidated in this area for a while before making this nice push up. So this is the context that we're looking at before hopping into any trades, just understanding that we are in bullish territory, and they're pretty much coming out of consolidation, and this is a whole lot of days of just up and down, a lot of chop. So I'm seeing this as a lot of confusion, and when you break out of consolidation, usually you have a nice continuation in that direction. So that's what I seen coming in. This day was yesterday. We already had a breakout from this consolidation, and we're above this 9 EMA. All right, so there's a lot of factors that I'm throwing out at you guys if you are kind of new to this, but what I'm doing is breaking down each aspect of how I could analyze the price. And when you understand that there's more than one way to analyze the price, then you could do that for each way and then put them together to make an overall decision whether this is bullish or bearish. All right, so for one way, I'm using the trend, which is in itself could be analyzed in different ways, right? You have highs and lows, right? This is this is a low, and this is a higher low. That tells us uptrend is present. You also have moving averages that could tell you an uptrend is present, and so on and so on. So another thing that I'm looking at is the volume. Here you can see the increase in volume over the last few days, and also taking a step back, you can see that this here is like a bull flag. If I start drawing some stuff, just connecting these highs, right? It's not a perfect line, but trying our best to connect some stuff, and you could visualize a pennant. So this is the pole, and this is the consolidation, and you can see on this day today we broke out of that consolidation. All right, the all-time highs pretty much was 602 on the daily chart, but when you go to the 4-hour, you're going to see 608 as an all-time high. All right, so keep that in mind as we are going to dive a little bit deeper into this trade by going from the daily chart down to, let's go to the 4-hour first, and we can see that we are above the 9 EMA on the 4-hour as well, which gives us another bullish confirmation. All right, you can see that these two moving averages, the blue and the yellow line, these are very choppy, right? Up and down, up and down. You really can't trust it as much when the price is in a range, but when the price is trending, you could trust the EMAs a little bit better. All right, so knowing how to use your tools is going to help you gain confidence when trading. All right, you're not going to use your EMAs all the time in all situations because it doesn't perform well in all situations. So this is a situation where I understood it as a trending environment, and I was able to use those EMAs to my advantage. So going from the 4-hour down to the 15-minute chart, we're going to zoom in to yesterday and today. you could see the price is above the 50 EMA, which is an overall sign that the price is still bullish. And then you also see the price above the 9 EMA, which tells you that the price is in the short term, right? The right now is still bullish. So if the price is above both of these, it's pretty much like two indications that we're bullish. All right. Now, after this huge rally yesterday from about 575 up to 594, which is a crazy move, you would expect a pullback, right? It's a pretty big move, but we didn't get that. We actually consolidated overnight and pre-market, and while we did that, we held this 50 EMA. So I hope you guys are getting the understanding that these EMAs really help give you an understanding of if the price is gonna reverse trend, or are we going to hold the trend and continue the direction of the trend, right? And different time frames will help you stay within the trend for that specific time frame, because every time frame is going to show you a different trend. All right, so looking back to this morning, this is 9:30, 9:45, 10 o'clock, and you could see that this is the previous high from yesterday, and it's very important because once we closed above it, that gave us validation that we could see continuation to the upside. Now, same way I drew that high, I'm going to draw the low where it pulled back to, right? You see how we pulled back here before continuing up here. So I'm going to use this as a stop loss level, right? This is going to tell you, hey, the trend that we created is starting to deteriorate, right? This low is starting to break down, so we got to keep this level and watch. Notice the price didn't get through our EMA, and it definitely didn't get through this low. So as long as price is above here, right, this low and above this 50 EMA, we are pretty bullish. So on top of that, at about 10 o'clock, we got this nice bullish candle. Now, in order to give you some details on my entry, I'm going to zoom into the 5 minute. All right, so notice how I'm switching time frames and I'm using it to my advantage when I need to. All right, you don't need to use a 5 minute all the time. You don't need to use the 4 hour or the daily all the time. It's more about switching it up and knowing what you need to see and when you need to see it. So in this case, I need to see my 5 minute because I'm looking for an entry, and I could see this previous high that was created at 9:35. All I'm looking for the candle to close above that, and we're gonna pull back. Well, let me not get too far ahead of myself, but once the candle closed above it, that was enough validation for me to see that the price is going to continue. Before all of this, we had higher lows, right? This is just telling me we're still in an uptrend because higher highs and higher lows give you an uptrend. So the higher lows is just one half of that formula, which gave me a heads up that we could make a higher high than this one here. All right, so we got that with this candle. I entered on that candle, and we ended up pulling back to this 9 EMA, which is probably a good idea to do most times. You should wait for the pullback to a certain level before entering, but in this case, understanding the momentum, understanding how things could be, the price could have just ran straight up and not have pulled back, right? So I was willing to risk the price pulling back because I knew that I would not have known what the outcome would be. So it could have been this or it could have been that, and either or, I was comfortable with my decision to enter, and held the trade, pushed up again, pulled back down. And this is just what you're gonna have to deal with if you want to hold day trades. If you want to scalp, you could just get in, get out, cool, less stress. But you'll probably miss out on huge gains. And I'll scalp when I have to, but when I see a good opportunity for the price to run, then I'm gonna hold that, right? But once you're in the trade, you don't have any control over what the price action does, right? It's like you're in the car with the Uber driver. You're not in control over how he turns the steering wheel, how he brakes, how he accelerates. I mean, you could mention something. You got more control in the Uber car than the stock market, but the stock market doesn't care, right? It's gonna do what it wants to do. So once you're in the trade, just let go and make sure you know where you're gonna get out for your stop loss. Make sure you know where you're gonna get out for your take profit. So in this case, I just got in, let the market do what it wants, as long as everything that I set up for the trade is being respected. And you can see the volume increased here at 11 o'clock, created this huge move up from 597 all the way up to about 607. So that was enough for like 150%. But I decided to stay in the trade. I called out partial take profits because I did see more upside for Meta. Now, this was a tricky area because this was the true all-time highs. If you look back on the 4-hour chart, we can take a look at that right now, actually. So we didn't see this on the daily chart, right? Remember, we seen 602 as the all-time high on the daily, and you might be wondering why you're not seeing it on the daily, but you could see it on the 4-hour, right? It's because this action happened in the pre-market. You see that 1 o'clock, right? 5 o'clock, and then by the time 9:30 came, we pretty much opened up at a different price, right? So I had this line already drawn. So when I was in the trade at about this area, I knew we could see a lot of, some pulling back. So notice even before we got to the line, price pulled back, got to the line, right near it, pulled back, got to the line, pulled back. So I'm already expecting this very strong level. But just because the level is strong doesn't mean it's impossible for the price to break through it. And the other side of this formula is how bullish is the price relative to breaking through it. So I'm just saying is that this is a strong level, but the momentum going up might be stronger. And that's what I was seeing in Meta and helped me hold the trade on top of this 9 EMA being respected the whole time. All right. So long story short, I knew I didn't want to swing on this trade with all the profit that I had on it. So I wanted to make sure I closed it out before the day ended. So at around 341 is when I exited the trade for 220%. We entered for 92 cents, exited for $3. All right. So if you had $92, you could have gotten into this trade with one contract and sold that contract for $3 at the end of the day. All right. So everything went down in the Discord, where you could see right here, we actually had an Apple trade that went pretty good today. But right after that trade, I called out Meta. You can see there for 92 cents. I told you the pattern that I'm following on the trade, and we teach the patterns in our Discord handbook that you get when you sign up for the Discord. All right, so you get to learn my strategies as well. And you can see 88%, 153%, still in the trade, and right here finally called take profit at 220%. All right, so that is that. If you guys want to join the Discord, the link is in the bio. And if you guys enjoyed this video, like, leave a comment, subscribe, and I'll catch you in the next one. Peace.